Let's start with the news of the week. We have first Galaxy Digital that backed off the deal with BitGo. Galaxy Digital said in a statement that it was terminating the deal to acquire BitGo due to BitGo's failure to provide financial statements for 2021. The deal is valued at $1.2 billion and it was announced previously in May 2021. So quite similar to the Twitter situation, BitGo is planning to follow up with legal action against Galaxy Digital for backing off. Crypto winter took its next victim. The crypto brokerage firm Genesis announced that they're slashing 20% of the workforce as well as exit of their CEO. The crypto lending business was going pretty spectacular for Genesis. In 2021, their book grew to $131 billion, as well as their workforce increased to 170 employees. However, all of that recently changed with the general market conditions, but also their exposure to the bankrupted 3 Arrows Capital contributed to the situation. The exact amount is $1.2 billion of exposure, according to their claim that they filed against 3AC. Genesis, however, did quite better than their competitors, such as Voyager, who are in a similar position. But Genesis has their parent company, Digital Currency Group, which assumed liability for the exposure. So this leaves Genesis' balance sheet pretty healthy. Despite the turmoil, Genesis remains stable for now. And we have next CME, which just announced that they are launching new derivatives on Ethereum and adding this way to their crypto offerings. This is the first time in history when Ethereum derivatives volume actually surpassed that one of Bitcoin. So CME was pretty quick to react. They're going to be launching both options and futures on Ethereum on September 12th. This will leave a very healthy window for investors to hedge their positions and manage risk until the merge, which is announced to be around the 15th or 16th of September, and a lot of volatility around it is expected. This news of today might seem not so relevant to the prices today, but we believe that this is something that is setting the ground for the industry for the next 3 to 5 years. And this is regulation. The Federal Reserve had been very actively involved in the activities that companies are conducting related to crypto, and they just announced the guidance for any banks that want to get involved in any sorts of crypto related activities. So the banks would require to notify the Fed prior to engaging in those activities, as well as checking if those are legal within the country and making the customers aware of the potential risks. Section, I want to briefly touch upon how you can use all that information we're presenting here for potentially predicting the end of the crypto winter or any sort of trend reversal. One of the factors that we're following very closely, as you probably noticed, is the Fed's funds rate policy. So they shifted to a hawkish policy from a very stable one. The interest rates in the US were near zero for a very long time, and it was quite of a shock to the market once they shifted that policy. This has short-term and long-term consequences, but more of when the risk-free rate increases, then the cost of borrowing becomes more, so there's less borrowing in the market, consequently less leverage, less investment. And on another hand, risk-free interest rate is too high, then investors tend to shift from more risky investments and asset classes to more secured ones such as government bonds, for example. So since crypto also became a digital asset class of its own, such policies definitely would affect the price action here. So talking about hikes, everybody is awaiting the Fed's September decision and how much they're gonna hike the rates. I think recently all of us got a bit overly excited about the positive economic data that came from US about the drop in inflation in July, as well as more jobs created in the same month. But the thing is that Fed is probably going to continue hiking the rates until they reach their target inflation rate, as already mentioned in previous videos. But more importantly, what the market is expecting. So we came up here with this data That is showing that already 100% a hike is priced in for September. By the way, note the date. The meeting will be on 21st of September, and usually around such economic events there is volatility in all asset classes. A hike of 63 basis points is expected, and this will bring the base funds rate to 3%. And we move to the VC insights. This week, rather than starting with the recent funding rounds, I'm gonna talk about two funds that just launched. So this is new opportunity to fundraise. The first one comes from Coin Fund. They just raised $300 million for a venture fund to invest into the Web3 space. They already have a fund that is investing in seeds, so this fund will be a bit later stage to invest in companies thereafter. The main focus of the fund will be layer 1 DeFi, NFTs, as well as gaming and infrastructure. There was also one more fund announcement coming from Shima Capital. They just raised $200 million to launch a new fund that will be focusing on very early stage, such as pre-seed and seed. And the first actual funding deal of today is the Layer 1 blockchain Injective that got $40 million in funding in a round led by Jump Crypto. Injective is a platform that aims to optimize and build DeFi applications, such as exchanges, derivatives, and even market predictions. In the recent months, we see a pickup in the DeFi deals happening, as well as a lot of institutional interest in this sector particularly. What happened last week is Dotbit. Dotbit is an open source decentralized identity solution. The platform aims to provide permissionless and irrevocable decentralized identity for individuals and DAOs. Dotbit raised $13 million in a Series A round led by CMB International. We could also see Hashkey as well as GSR Ventures on the cap table. And that was all in terms of deals. I wanted to highlight why we are sharing those with you. We want to provide you the tools to be able to analyze the health of the industry, as well as follow potentially for investments. There are a lot of shows out there that are suggesting you what to buy or what to sell, or a lot of questions such as what will be the next hot token or coin. I think seeing what the VCs are doing is the best way of analyzing the market, or even if you're looking for future investment, to base your views on what's happening now. Because most of the projects that get funded by VCs, they do not only get the capital, but they also get a lot more resources as well as expertise. The VCs always are helping their investments grow. They have their best interest in mind because this will reflect in the price for them as well. So you probably have better chances picking up a deal that is already backed by VCs than another project that is just bootstrapping or just starting with their own capital. So this is all from me this week. I hope you enjoyed all the content. Thank you so much for watching and wishing you a great week ahead.